Listen, if you trade smart money concepts or ICT, you are doing it incorrectly. In trading, I see too many people overcomplicating and not fully understanding what's really going on. And honestly, I have to blame all these fraudulent trading gurus who have lied to you and overcomplicated all these concepts just to sell you their shitty course. What is up, guys? My name is Arbaz. You guys might know me, but I'm a verified 7-figure funded trader who has made over 6 figures in verified profits trading through proprietary trading firms. And no, I didn't drop out. I have a college degree, unlike all of these gurus. But today in this video, I'm going to be here to explain to you in a no bullshit guide how to trade one of the most overlooked concepts in trading, smart money concepts or ICT concepts, known as the market maker model. A lot of beginners don't know how to identify market maker models and actually know how to execute on them, but I'm here to explain it to you fully in depth and actually in the right way, unlike these gurus. So stay tuned and let's get into it. All right, so what is the ICT market maker model? Okay, in simple terms, the market maker models are higher time frame frameworks, okay, that banks, institutions, whatever that might be, the higher ups, okay, that they use to create and engineer liquidity to and then distribute it. Okay, now why does this work? Because remember, guys, the institutions are the ones that control the order flow. They control the overall narrative of what price is going to do. So obviously, you want to be able to be on the side of obviously the smart money, the institutions, so you can make money, right? And again, I'm not trying to make this super complicated. All these gurus are making it super complicated and using all these fancy terms and jargons. It's really not all that. Okay. Now, why is this important? Is because you can use this for a higher time frame narrative to understand current order flow and then go down and execute on the lower time frame because of the fractal nature of the market. Okay, you guys should know that being a fractal or the market being fractal means that whatever happens on the higher time frame will repeat on the lower time frame. Okay, now there's a reason why I say this is a theoretical market maker model. You might not see it like this usually, but it's theoretical because in reality you're going to realize that it is not like perfect like this. Okay, now I'm going to address key parts of this, but let's just cover this in, from an overall perspective. So as you can see in this picture, the market maker model is essentially an accumulation that occurs after an expansion, a corrective, an expansion, a corrective, and another expansion. So 3 expansion legs or 4 expansion legs followed by 3 corrective legs and, or 4 corrective legs, okay, into an accumulation. And then after the accumulation, right, a new low or high is usually made, and then order flow will shift and then continue the, the narrative that it was originally doing on like the weekly, the monthly, the yearly, whatever. Okay. The biggest thing is that these expansion and corrective legs are going to be evidence of the higher time frame order flow. Okay. And that the market is going in a certain direction after you've identified kind of, these key components, right? So I have it kind of marked out here in a simple, easily digestible way to see, but essentially this is the previous market maker model or some type of previous PD array slash POI slash setup. And as you can see, we have our expansion our expansion leg that occurs down, the corrective leg of that expansion leg, then another expansion leg followed by another corrective leg into a third expansion. Now, after the third expansion leg, you're not necessarily going to have a third corrective, the corrective leg. The third corrective leg might be accumulation. It might be, this consolidation slash accumulation, or it might be, it actually might make that and then make that low and then go into some type of consolidation. But it's going to be something like this. Now, the biggest thing, like I said, is that you want to be able to identify these consolidation periods, right? Because that's going to signify the bottom of the market maker model. Okay. And these might take like 2, 3, 4 days to play out. Usually they happen in the week. But after that happens, usually there's some type of news catalyst that comes out, takes out the low, and then has a huge change of character to the upside, or, you guys probably know it as a market structure shift. And then you have that, shift in order flow based on the market maker model, right? And then once the model takes out the previous high liquidity, right, from the previous model or previous PD array, then that's a potential rebalancing period of where the model will start again, and you have the same thing happen, and then the distribution, right? Now, this can be considered similar to like Wyckoff, if you guys understand Wyckoff or whatever. But again, I'm not trying to make this too complicated for you guys. I'm trying to make this easy, understandable for all the beginners trying to learn ICT, learn this model, whatever. Now, here's the thing,
right? It's going to be hard in reality to identify these expansionary, legs, corrective legs, etc. But what you are going to be able to identify are these breaks in structure to the downside and these candle closures after, as well as these accumulations, right? Now, the market is fractal, guys. This is what you need to understand. Okay, people say, "Oh, you want to have your high, low risk entry around, this area and then this leg, and these are your two areas, right?" But that's not necessarily the case, because when these legs are in formation and are established, you can use the idea of the markets being fractal to then understand that, hey, when I have a swing leg, as you can see right here, this is the swing leg kind of magnified on the lower time frame, right? If I kind of move this out on the lower time frame, did not mean to do that. Okay, here we go. On the lower time frame, if this is our swing leg that I just kind of overlaid right here, right? We have that swing leg down, corrective, swing leg down, corrective, right? On the lower time frame, you will still have the same thing happening, but again, just on the lower time frame. So then obviously your potential entry points are going to be on the retraces or some type of, based on, off some type of, supply demand level on these levels and then into the main overall narrative, right? That is exactly what's going on here. Okay. Now, again, I don't want you guys using these, these models for the lower time frame. They're really mainly to be able to establish higher time frame narrative only, because there's too much noise in the lower time frame. Again, there's a reason why it's called theoretical, because you're going to understand the theoretical model is not the same as the real life model. Okay. Now, we're going to look at an example here on gold. I don't want to cover this too much, but we are going to cover right here. Give me 1 second. Okay, there we go. But yeah, we're gonna cover what's going on, right? How you can execute on this, and what to look for. So it's clearly obvious that coming on October 27, 2013, once we have this huge expansionary leg to the upside, right? We take out this high right here, right? This higher time frame high, this higher time frame liquidity pool. What's going to happen is that we have this consolidation. So this consolidation ends up being for, Monday and Tuesday. But notice how this range, right, gets manipulated, taken out with that high that I told you, and you have that expansionary move downwards. Now, it's going to be hard to, execute on this, because, this could just be some type of high being made and then it could do something like that, right? But that's why you would have to zoom out and look at the bigger picture and wait for your higher time frame breaks of structure, okay, / change of character. Right? And that happens right here. Obviously, that's a bit later, but you have to understand, guys, that when this is happening, once we have that new high made after that accumulation, we have our first expansionary leg. Now, in theory, right, we should see a corrective leg followed by another expansion leg, but you'll notice in reality, it's not going to be as smooth or clean. Okay? So if I were to show you this, right, you'd be like, oh, like this is like a weird manipulation. If this is what the market's really looking like right now, right? This is what it's looking like, right? But what's going on? This whole, all this complex movement is just an overall swing leg into a move down, right? That's all this is, okay? And obviously, the same principles are going to apply based on our ideas of retracements, liquidity, etc., highs and lows, right? But basically, in terms of the overall narrative, that it's still risky to get in on this, because we still could just do something like this, right? So what confirms the market maker model? It's going to be that second break of structure. And this is what they don't tell you. That second break of structure to the downside is going to be your highest probability area of where you then get in on somewhere around here to catch that third expansionary move up, okay? It's that simple. So once we have that secondary expansionary leg that forms and we close below this low right here, we now know that, okay, we're probably going to retrace to some POI, right? Some POI, some supply demand area, some level, right? And then have that continuation to the downside, guys. Now, I love the higher time frame. I always like to mark out my higher time frame supply and demand levels, and just areas in general. Oh, right here. Hold on. Let's see if we can go over here real quick. Okay, let's move it over here. But there are other ways you can enter. You can enter off, things like asset divergence, also known as SMT. You can enter off, some type of, lower time frame, change of character, break of structure, candle closure, etc. There's many ways to enter. Obviously, we're mainly here to show you guys the market maker model, right? But essentially, you should be able to, identify these points. So if I were to kind of mark out my supply demand right over here, so let's kind of move it out like this. Actually, I'm gonna change this up a little bit real quick, like that. Okay, I'm gonna make it like that. Boom, boom, and then boom. These are our supply demand levels. Okay, simple. Okay, now in reality, these aren't going to be perfect reactions, but you can use them as guidance with other confluences. Obviously, we don't have our agent session indicator right now. Actually, I should turn that on right now to find an area, to find it, to find out where your reactions are going to be, right? And if we have these marked out, like let's go now to the lower time frame over here on the 5-minute, you'll notice that once we see kind of this structure forming in real time, right, and especially followed by this next break of structure, we know that, oh, okay, this is just bullish. This is the corrective leg that's occurring on our second overall higher time frame leg, right? And now we know that we're looking for some retracement off some level. And in this case, you're going to notice that, oh, we reacted off this imbalance right there specifically, and then had a continuation to the downside. Now it's always risky, right? It's always risky when you're seeing this happen, but that's why you wait for your external lower time frame change of character / break of structures. Okay, it's risky still to enter off this because, well, price could just do something like this on the lower time frame and have some type of complex reaction like that, right? Have a deeper retrace and then have that move down. But what is the confirming market structure that is showing that, hey, we are continuing our higher time frame market maker model to go down to the downside? It is this break of structure right here. Okay, now when that happens, that break of structure to the downside, you know that you are simply looking for retraces to key levels, okay, to then catch a short, okay? And in this case, I've marked out 2 key levels, okay? I have this supply level right here and this supply level right here. These are the average points. Go watch my supply demand video. If you're not sure, I've covered this, fully in depth into our overall higher time frame demand level, which is now acting as supply, right, with these reactions right here. Okay, excuse me. Now if we go down here, right, scrolling a little bit over here, okay, if you notice, these 2 levels are our perfect reactionary levels. Now I like to enter off some type of confirmation, usually like a 3-minute or 5-minute doji confirmation or something of that sort, okay? But you don't want to enter in blindly. Again, you have to have another type of confirmation, and when that happens, because, well, you could just get blown out, right? If I do something like this, right, stop loss, tight, oh, I would have got blown out. Now, obviously, this one would have played out, but you guys get my point, right? Now, for example, maybe you want to enter off like a 1-minute confirmation. Let's say we're gonna wait for our 1-minute, change of character / break of structure, right? Let's say we're gonna do that. Well, that doesn't happen. There's no structure really. I actually wouldn't say that happens to like around here. So obviously you would have market ordered around there. But let's say you entered off a 1-minute, candle closure, right? Obviously you would have entered off that candle closure right there, stop loss above the high. But here's the beauty of this whole model of where this comes in. Now, since this is, following the higher time frame narrative, and on the lower time frame, we've already, we've made a fractal external market structure shift / break of structure in line with our overall secondary expansionary bearish leg. You can hold this trade all the way to some higher time frame low now in line with our market maker model, right? Because we're expecting this to happen. Boom, 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 boom. We're on our second leg, right? Excuse me. Let me redraw that right here. Right? Our secondary leg. Okay? And if we look closely, where is our higher time frame, liquidity pool / lows? Obviously, we have one low right here, and this is a pro tip for you guys. News events, news data highs and lows are algorithmic liquidity points / areas of where the market will want to reprice to. Okay, and if you notice right here, this looks like a Wednesday. I'm gonna kind of zoom in a little bit right here. You'll notice that this is probably some news event. I can tell you right now from the reaction of it. Okay, but if you notice, right, this is going to be a very high probability, very, very high probability, whatchamacallit, let me delete this as well, very, very high probability low that you could have held this towards. Now, obviously, in this case, you have this low, you have Asian low, and I can't tell you how to take TPs. You have to, do it yourself, right? You have to choose it yourself. I can't tell you how to choose it, right? But this low is almost a certain guarantee because it's a news, it's a news event. It's a algorithmic liquidity point, right? And yes, are you going to have complex reactions of where you'll have random just pumps and dumps and just complex internal market reactions? Absolutely, right? In this case, if you held towards that Asian low, right, you could have made 10 RR on this trade, guys. Obviously, if you set to break even, this would have stopped you at a break even, and then it would have gone all the way down to that next algorithmic low that I had marked out, right, which is like a 14 RR. But the whole point of this is that you are executing based on the the higher time frame narrative, right, and then you're looking down to the lower time frame, going down to the 15-minute, 5-minute, 1 minute, waiting for your external market structure shifts / change of characters, and then entering respectively on that retracement, right, to another higher time frame liquidity pool, which in this case is going to be your Asian low or some type of news low. Okay, that is literally all this is, guys. Okay, now again, do not take this model as the holy grail. Okay, like I said, it is a theoretical model. The way this is formed, you're not necessarily going to have a liquidity sweep or some high being made up here or something like that. You might just have no high made. You might just have that market structure shift to the downside and then a continuation, right? There's a lot of variations to this. Models are only good in theory, but in reality, you obviously have to go with what price is showing you. But the method of analysis of where you analyze and have that second change of character / breaker structure to the upside, like right here or right here, are going to be your key indicators of then to go down to the lower time frame right here and then look for that same thing happening and then just execute on that, right? As well as obviously being able to identify the start or the end of a market maker model based on the accumulation that's going on currently right here. Okay. But yeah, I hope you guys enjoyed that video. Let me know if you have any questions. And now if you actually go to the next, before I head off here, if we actually go to the next example, notice this, guys. Okay. We have our consolidation for one singular session, right? This is Asian low. Okay. We have that manipulation of that Asian low and new low made, and then an expansion. Now notice how it's going to be really hard to get on that first impulsive, leg, right? But that's why then you go and look for the next iteration. And I'm actually I'm going to speed this up for a little bit, and then so we get some more data points. You look for the next iteration / next swing point being made, and then enter off that, right? In this case, right, what do? Let me delete this for now. Delete all this for now. Okay. We had our first expansionary leg up, our first corrective leg, our second expansionary leg, causing what? A change of character right here. Okay, on the higher time frame. So we know that order flow is very, very, very bullish currently. Okay. If we don't react off some POI off here, we're going to react off some leg off here and continue to go higher. Okay. Now, if I go down to the lower time frame now and pull this out here, and sorry if it's a little bit messy. Sorry if it's a little bit messy, guys. If you go down to the lower time frame here, you'll notice, right, that you have multiple supply demand levels, right? One right here, one right here. And then obviously based off this structure, now you only really want to be looking at structure, in this relative area, since we've already broken to the upside right here, right? In this general area, boom, we got one right there. And yeah, that is really it, I would say. Boom. Okay, now coming into Asian, you have to obviously monitor the market structure. Okay, what happens now on the lower time frame? Obviously, you would probably expect some type of deeper retrace to retest off this level, or maybe even retest off one of these levels, right? And obviously, if you look right here, oh, we did end up retesting off this level right there, right? But look what happens, guys. Look at what happens, right? You have to go with what the market is telling you. Go with the order flow, okay? Once we close above this relative internal high, that is a relative external change of character right there. Okay, well, actually, relative internal change of character. Obviously, this is an external change of character right there, but relative internal change of character. Okay, once we do this, you know that we don't have to draw down to this low right here. We don't have to go to this low, guys. Okay, we can just retrace and react off a supply level, a demand level, and then go higher with high confidence. And if you notice, this could have been an area where you got in, right, based on this supply level. Maybe you want to enter off some 1 minute, 3 minute confirmation. Let's go down again to the 1 minute. Let's see if we have any good 1 minute confirmations. Boom, right there. I would say that's a pretty good strong doji confirmation. Stop loss below the low. You can make it tight. Oop. And then, oh, what's going on here? Apologies for that, guys. Let's maybe do like that. Stop loss below the low right there. And boom, you can have a amazing, amazing, amazing trade and starting, you know, an external high, knowing that it's going to be taken out right there. 4.61 RR. It's that easy, guys. It's literally that easy. Okay. And obviously you can scale in, you can use your ideas of, you know, the same thing, change your characters, external breaks of structures, etc., and just continue riding the order flow to a certain point. Now, obviously, this is news. We're not going to be trading this news, but yeah, you can even consider this like a mini model, right? Like a mini market maker model where we do something like this, right? Make a new high, and then we just, you know, we dump. In this case, obviously, you want to be looking at the higher time frame. I don't really believe, you know, even though I said that, I don't really believe in the lower time frame ones. But even though we had that happen, this just looks like this just looks like a complex movement of now we're retracing to a better demand area to where we're then going to have a reaction. Now, how do we analyze market structure going like this? If we have a market structure shift slash change of character based off this high now that closes like this, you can easily just play the retrace right off that structure and for it to go higher. Now let's like watch price now. Let's see what it does. Okay, boom, simple. Let's see what's happening now. Would you look at that? I didn't even look at price. I didn't even remember what price was going to do, but I just told you guys, once you've closed structure over here, it is that simple to look for our supply demand levels, right? Inside our major supply demand levels, and these are just our refined points, and just enter off retests off that. Excuse me. And in this case, obviously, it was right here. Stop loss below the low. And okay, you know, if you targeted that high, you made a 2RR trade. Obviously, if you want to target all the way up there, right, target this high, it would have stopped out. But again, this is just complex movement, right? Complex movement. We're just having a deeper retrace, right? To some level around here. If we look, actually, it's this, it's this supply level right, or demand level right there. Boom, you enter off some confirmation, right? Stop loss below the low, and you target that external high. And just like that, it's that easy, right? And this just actually would absolutely run, you know? But that's kind of how you know, are able to analyze market maker models and obviously wait for your, you know, your external chain of characters slash breaks of structure slash market structure shifts, and then obviously waiting for the retraces, then entering based off those confirmations to hit really, really big RR trades. Now, they're not going to happen all the time, guys. Remember this, you know, if we look right here, this happens on October 30th, and obviously you wouldn't have a setup till, you know, November 8th, so about a week. But that's the name of the game, guys. You got to be patient, right? There's no holy grail. There's no, you know, secret sauce. You know, that'll work every single day. You know, unless you're scalping or something, I don't know. But if you want to get those high RR trades, this is the way you would have to do it. And yeah, I hope you guys enjoyed that video. Let me know if this made sense to you. Let me know if it didn't make sense to you. Let me know if you want to see more elaboration on this. And with that, I will see you guys in the next video. I hope you enjoyed. Peace.